And welcome back to the Halftime Report. Time for the calls of the day. Bernstein initiating on the medical devices sector with Intuitive Surgical, Boston Scientific, and Abbott Labs, each getting an outperform rating and price targets calling for double-digit upside. Each of these names, by the way, beating the S&P 500 year to date. Intuitive Surgical rising 33%. Remember, this is Terra Nova's final trade the other day. Boston Scientific gaining nearly 31%, and Abbott Labs up almost 8%. Now, Carrie has been looking into the space. What have you been looking at, Carrie?
Well, we own Boston Scientific. We like it a lot, and we like it right here. We like ISRG, Intuitive Surgical. It's a little expensive here. It's a high multiple stock. Abiomed, ABMD is the name. That's the valve company. It's sort of it's a pump, really great pump company. It's on the expensive side. We'd like to get it a little lower. But I think some of these names represent a good opportunity, considering that healthcare has not been a strong sector. Tech is where everything has been. Energy has been strong. This gives people an alternative. I think these are good ideas, and I support the trade.
You know, one of the names that came up as well as Medtronic, and we had some unbelievable option activity in there just the other day. They're going out to August, Mel. Just a little bit upside. They were buying the August 90s, looking for Medtronic to maybe finally start to get back a little bit of the mojo. It had lost some of that mojo. It had really sold off, not to the absolute lows, but it's hanging around the lower end, definitely of the range. I think this is a name that can recover absolutely and start to move again to the upside. I bought the calls. I didn't buy the stock. I thought about it. Because I always wrestle with this idea when I see the unusual activity. Do I want to own this stock? Because if so, I'm going to be selling calls against it. Or do I just like these calls? In this case, I love the calls, and that's why I'm in there.
Part of the call involves M&A activity in the space. I don't know if you like the space, Steve.
I do. I own Boston Scientific as well. I bought it when the deal went away. That wasn't a deal, and Stryker wasn't talking to him. Ultimately, it happens, but it's important for growth. This is one of those areas that just keeps growing and growing. Intuitive Surgical, it's like Amazon, not in terms of the business model, but always looking expensive. And you always get an opportunity to buy it. So I'd love it to come back down.
Opportunity cheaper.
I haven't owned it, right. I haven't owned it for a long time, but because of the multiple, that stock's very volatile. Sometimes they miss by like a penny on earnings. That's when you step in.
I've always looked at Intuitive Surgical as a great measuring stick of the economy itself because of the cost of what you're talking about here with the machinery, with the Da Vinci.
True.
Yeah. And so when you look at it, if the economy is rolling, it seems to me that Intuitive does extremely well. We start to see any kind of pull, any kind of rollover whatsoever. That is not a name because, like you say, the multiple's extremely high. I'm sort of surprised Joe was looking at that from a final trade. I like it. But going forward, when you look at the multiple it's trading at right now versus its peers.
That's where the bears come out. And that was the big bear story, that the economy's falling apart.
Right.
And
Hospitals
that nobody's going to buy
can't afford to do it.
$1 million bucks a piece. But the facts are that they're additive to revenues.
Absolutely.
And that hospitals are funded on a different basis. So that the economy, these stocks are somewhat resistant. The biggest issue to the economy, biggest issue is always what the insurance companies will pay.
Sure. Right.
But everybody knows that game. So they come out at a higher price and then negotiate it down.
All right, let's get to this other call. BTIG turning bullish on Yum Brands, a firm upgrading the stock to a buy rating, $92 price target. That's 15% upside from current levels. Shares are nearly flat for 2018. So is this worthwhile here?
I think it is. Look, people are going to have different opinions on the individual names in this sector. Some people love McDonald's. I get that. But Yum is straight down the middle of the fairway as far as the sector goes. The valuation is terrific. And I just don't think there's any reason to not like this sector. There was, a year or two ago, these were the TINA, there is no alternative, and you played them for the dividend yield. That trade has gone away. They've become a little bit more rational in their valuation. And I like Yum, as I said, middle of the fairway for this sector.
Yum's an interesting one because it spun out its China business recently, or not recently now. Time flies, I guess, when you're having fun. The stock is down by about 5% today's session, presumably because of what is going on in China. Is this an opportunity? Is this a stock that we should be worried about getting hit by some sort of a trade war? It seems like it's being swept up in this.
Well, it's somewhat swept up in it, but also it's facing tough competition in the United States. McDonald's is giving them a run for
Yum money. Specifically, not Yum China.
Yeah, no, okay. U.S. And comp sales in the U.S. for a lot of the restaurant chains have been weak. So I think they're battling that. I mean, the Starbucks number read-through is also not good for Yum.
Yum China, is that an opportunity?
I don't, no. I would stay away from that one right now. I actually like Yum. I like this upgrade. And the Grubhub, the piece there, I think makes a lot of sense because why has Domino's dominated so well? It's because their technology has been so great and the efficiencies that's actually been such an incredible driver. Well, this could be the exact same thing. They could be able to gather the data. They could move them forward in terms of the digital, the ordering and the delivering and all of that. This could be something this is a big moment, I think, for Yum, and this could actually put your stock. I understand why it's a buy now.
And just to answer your question, because I don't think we have about Yum China, look, it's probably has to do with asset class flows more than anything, that this is held in a lot of China ETFs and mutual funds. Yeah. Those funds are getting dumped a little bit today, and this comes out with it. So it probably is an opportunity.
The technology is the most important part of this, as you mentioned.
No. Yeah.
That's what.
For all of these restaurants, it's make or break, and I say break because Starbucks had difficulty, right, keeping up with orders done on their mobile app.
Yes, I agree.
So it goes either way.
Before JAB and the management of Panera stole from shareholders for a third less than what it was worth, their technology drove them. They were on the run rate of over $1 billion just from tech.
Yeah. Yeah.
Chipotle, they're going to get their tech going as well, and that's one of the reasons why the stocks moved up. So it's critical.
Came from Yum.
That impacts, right, exactly. That'll impact Yum.
Will that help Starbucks, which we saw yesterday at a fresh 3-year low?
No, they've already been there.
I mean, I think what you're just saying right now is all of these companies have to be there and are there. I don't think when we're talking about technology, this isn't like, in e-commerce where you've got Amazon and Walmart and really nobody else. All of these restaurants have to have the technology. If you don't, you're not really on a level playing field. And so with Starbucks, Starbucks has some specific problems. And particularly with the PR over the last quarter, both for investors and consumers, they've got a lot to prove.
Right. Teva Pharmaceuticals has surged more than 43% in the past 3 months, but Citi thinks there is still more room to run. That firm adding Teva to its U.S. focus list, raising the price target to 27. Carrie, I go to you.
Yeah, I think that it's a bold call. It could work. We don't own it. Teva is a company that's in search for an identity. It was a specialty pharma. It became a very big generic drug player. They bought an awful lot of assets. They've shed some of those assets. They bought others. The stock came down. Now it's coming back. I think if they can produce some earnings, we could see the stock continue to move higher.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.